Wow, in this yet another powerful video, we gonna be exploring another powerful concept in the Insight Empire. So I welcome you on board to your number one source of Forex trading insights. And today I am willing to share with you my secret strategy when it regards to trading a specific data that we call the FOMC. Now, FOMC data is one of the most popular data that actually prints in the financial markets, and so many people don't actually know how to navigate the financial data of basically this particular FOMC. It's one of the most powerful economic data release that is released by what we call the Federal Open Market Committee, and this is one of the most powerful committees in the US economic forum that basically guides the government on things to do with funds rates. It also guides the government to do with monetary policy, employment, and all that. So FOMC is basically a committee which basically constitutes of 12 people, different presidents of different branches of the Federal Reserve and all that. And then their current chair is called Jerome Powell. So this is basically a background information on what we are diving into. And this particular committee releases a very powerful data quite often, and this particular data is what we call the FOMC data, which basically comes in to give us the information on what the FOMC or the United States economy is looking at. Are they looking to be cutting the interest rates? Are they looking to be hiking the interest rates? And as you know, when we hike the interest rates, the direct implication is that we resort to a strong dollar, because not so many people can be able actually to access the dollar because of basically the criteria of getting it from financial institutions. Is because the interest rates are not favorable as such. But when we cut the interest rate, the dollar basically becomes strong, becomes weak. So now when we are analyzing the FOMC, there are so many things that you are likely to hear people talking about. Most basic concept is dovish and hawkish. And when we have a dovish FOMC data release, this means basically we are looking at cutting the interest rates. And when we talk of hawkish, basically we are talking about hiking the interest rates and all that. By the way, you think NFP is crazy. You have not seen how crazy and mad FOMC data can be, right? It's only that it does not spike immediately like like the other data, like employment claims, unemployment claims, and what you call the non-farm payrolls. But this one is very, very crazy, and that is why you need to pay a lot of attention to it. So I'm here today not to talk about how to fundamentally trade FOMC data. I am here to show you what to do technically to be able to get this particular huge move. And without wasting time, today we are basically in the charts. I've shown you basically one of the times that we had FOMC data, and I will be showing you basically how I traded that particular FOMC data and how basically I deck trades for the last 4 years. By the way, this is my 6th year trading the financial markets, and I have not failed to make money in every single FOMC. So this is a life-changing strategy, and I want you to pay attention to it. First, you can get your trading view and try to backtest for a series of as far as even 10 previous FOMCs, and this is the data that you will always be getting after backtesting in your trading view, because whatever I'm talking to you is not some rumors that you can get on YouTube or elsewhere. It's practically what I've been doing for the last 4 or 5 years, and I have been seeing consistent results. So even if you are not trading any other strategy, this can be able to make you money. So let's dive to it. Now, when you come to this particular chart, there is something that is going to be very powerful that you want to explore. Number one, you want to look at the Forex factory. And as you can see, previously we had this particular data printing on June 18th. And this data prints at 9 p.m. East African time most of the time. So please convert to your time zone, because currently I'm speaking from East Africa. Now, when you come to here, you need to come to the asset that we are trading. Specifically, I'm a gold trader. I love trading gold. And on that particular day, this is a replay of what happened for that particular day. As you can see, this candlestick in the 30 minutes time frame, you want to strictly trade at the 30 minutes time frame. All right, you want to strictly trade at the 30 minutes time frame. Now, in the 30 minutes time frame, you can see this candle printed at 2030. All right, so you need to go to the next candle that printed that particular day, and the next candle printed. All right, I'll have to replay that. Good. 18th June is when we had FOMC. That is 10th June. We want 18th. Good. And so 18th June, this is 13th. This is 16th, 17th, 18th of June. All right. Yeah, this is 18th of June. At what time? It was at 9 East African time. So at this particular time, all right, at that particular point. So here, the market has not yet played out for the FOMC. It's currently at 2030. And remember here, the news is supposed to print at exactly 9:00 p.m. at exactly 9. So one thing that you want to see is you want to see the next candle come to print, the next one 30 minutes candle to print in this particular manner. What the time is 2030. All right, now the next candle that it prints is the 9 p.m. candle. Is a very important candle, and basically is this particular candlestick. Now once this particular candlestick prints the exact candlestick of the data, you don't want to engage when everybody is buying, because as I keep on telling you, best setups always forms where masses are being literally stopped out, and you do not want to be stopped out when masses are being stopped out. Remember, the market moves after taking so many people out, and you don't want to be part of the statistic. So you want to wait for this candle to close, and then you want to mark the high and the low of the candle that printed at 9 p.m. or the low and the high of the candle that resorted to that particular news. And by this particular default, to discover this particular candle, then the other news is being released at 9:30. Remember, this is the first news. Federal funds rate has been released, and then FOMC economic projections being released. Now you want to wait until 9:30 p.m. the FOMC press conference. This is the most powerful data that bears the direction of the market. So what you want to do is you want to come back to your market and wait for the next candle to print the candle of now the 9:30 news. So we go to the next candle that prints at that particular time, that you want to wait for this candle to close. If the candlestick closes below this particular line or the low of the previous candle, you want to be in that particular trade for sales. And if the candlestick closes above this particular line, as you can see here, it closed below. If it closed above here, you are in for buys. And so where will your entry be? Will be exactly where that candle has closed. That is where your short position could have been, and your stop loss should strictly be, all right, let me delete these ones. Your stop loss should exactly be at the high of the 9 candle, and then you are supposed to hold that market until the previous time or the following day during the New York session, which in East Africa starts in between at around 3 p.m. Because at 3 to 4 is when we have New York and London overlap. So you want to wait, you want to hold that trade until the following day. Literally, that's my point. You have to hold this trade overnight, and then across the following day, and let's see how it plays out. So now we are already in the trade, and boom, we are seeing the market moving. As you can see, it's moving, retraces to our direction a little bit. You want to be in that trade, you want to hold that particular market until it fully plays out, giving you a good risk to reward ratio. So that day has closed, and now the following day is here, and boom, as you can see, we have already hit the target, which is a very clean 1:4. Very amazing trade. But even if you continue holding, what time is it over here? This is in the morning still, so London has not yet arrived. So let's see how it will end in the London time. Oh goodness, no, we are still there. All right, so I want to see the next candle to form. in the London time, in the New York time, sorry. We had our retest, and as you can see, we hit our take profit over here for this particular day, and that's how we secured a very good 1:2. So we are closing at the start of New York. Where is the New York? At around 3. Where is 3? At that particular point is where we are supposed to have our exit, and that is how we got a very good trade, which is basically a 1:2, easy, without struggling and without a lot of hustle. So this is basically the easiest forex trading strategy that you can be able to backtest across all the FOMCs that has already opened, and this works almost all the time. As you can see, we are supposed to close at 3, between 3 to 4 East African time of the following particular day, and that is going to give you a good risk to reward ratio, let's say 1:2, 1:3, and you'll pretty be in a good trade. So yeah, so see you in another video yet explaining to you how to continue trading in the financial market, and I hope this particular video is going to be helpful for you. But I want you to backtest in the previous FOMC we had, and then give me a reply on the comment section and tell me whether it worked out and what is the odds of you basically using this particular strategy in the upcoming FOMC. So see you in the next video. My name is Blue Ball Forex, and I am here at the Insight Empire.